Now, what was missing, AI didn't go and fix the problem today, but that's changing. What's going to happen is AI is going to recognize that subscriptions are being canceled and customers don't want to be canceled and send those notes, and it's going to go in and fix it, and it's going to tell me what it did. And that's when things really change, is the agency of it.
Hey everybody, welcome back to Break Free from Wall Street, the podcast where we talk everything alternative assets. We have a great guest with us today. We have Joey DiDomenico. Joey, welcome to the podcast. Really grateful to have you on. Just for everybody who's wondering, Joey is the CEO of Aspira. It can be confused with Inspira, so it's Aspira Plans, a provider that creates self-directed checkbook control solutions. I mean, we could both talk about checkbook control until the sun goes down, but really excited to talk to you today about checkbook control, but also about where the economy is headed and what people who are in the alternative asset space can do to prepare themselves and really reevaluate the strategy that they have currently. So again, welcome, Joey. And if there's anything I missed, tell us more about what you do and your background.
Yeah, so I started at Merrill right out of college, went into the training program there, spent about 7 years there, and then I spent a few years at Citi. And then I was a stay-at-home dad for 5 years. And
Mm,
that's been the hardest job I've ever had. I've got
yeah.
5 kids. So house was loud. It needed to be
Yeah.
managed. I couldn't manage it. So it was challenging. I needed my wife's help for that. And then after 5 years of helping to raise 5 kids, I needed to go back to work, and I did not want to go back to the regular financial services companies, the wirehouses, the brokerages, the financial services companies, because it just seemed like my friends who still were working in those companies were depressed, and part of their issue was they charged high fees for not really bringing that much value. And I ended up going to work for after starting a couple of small companies, into work for a trust company. And I had learned about self-directed when I was at Merrill, when I had a client say, hey, Joey, I'm going to take my IRA and I'm going to invest in this startup company. And I told him, you can't do that. You can't take your IRA and go to a private company. It's not how it works. I had no idea. And he said, no, really, I guess there's this trust company in Ohio called Equity Trust Company, and they
Mm,
took my IRA from my Schwab account, and he explained the whole thing to me. And I was like, that is amazing. So I ended up investing in that same startup company that he did. And that was kind of my introduction to it. So that was always in the back of my mind. Plus, I held on to that company for a number of years and had a successful exit with it, and had to move that money back into my Merrill account. And it stuck in my mind. When I needed to go back to work, I was like, I want to work in that private industry, because that seems like it's awesome. So that's what I did. I went to work for the interest group and did that for, a couple years before I started my own company. And back in 2015, people were just starting to get more of their operation online. At the time, it was all paper forms. And I even did this little video where I took an equity trust company application where I was going to transfer an IRA and buy 3 investments and then make a contribution. And I ended up having to put my social security number like 37 times on different
my
forms.
God.
And I actually counted them. I had the video going. I counted each time, put my social number in a box. And it was just so crazy. So what I did wasn't rocket science. I just, made it digitally first, where you could make a PDF of what we did, but everything was data online. And then 2018, 2019, the crowdfunding portal started taking off, which I was
Mm,
surprised. I didn't think anybody at that time would go online looking for an alternative investment and then put in the information to transfer money to people they've never met online and buy stuff. But they did. And then
For some reason, they did.
there's a first time for everything. And then now, of course, look at today. It's crazy. And so these crowdfunding portals were my best referring partners. So one of them ended up buying my company. So I moved to New York in November of 2019, right before the pandemic happened. So I
Mm,
spent 3 years in New York City, pretty much during the pandemic. Didn't really get the good experience of New
yeah,
York.
not ideal timing there.
No, and it was cold. I was from Seattle. It rains a lot, but at least I'm not freezing or I'm not too hot.
Yeah.
And then after that, moved to Tampa, work with a number of my old customers that were going through. When you have, you know, close to 1,000 customers, you end up with a handful of people who just have advanced planning needs and people that need to spend a lot of time with you. And that's like most companies' worst nightmare. It's like we charge $300 a year for the service and somebody wanted 100 hours to figure out their problem. And it's like, no, we can't, we can't, that doesn't pencil. So I just agreed to work with those people on a billable hour, higher fee basis and brought those people in. That's I spend a lot of my time doing now. The world's changing like it did before. And let's talk about what's next. Let's talk about
Hmm.
what tell me about what I know I'm not supposed to ask you questions, but what are you guys working
Nobody
on?
said
And
that.
then let's go from there. Yeah.
Yeah, I mean, like everybody else, I think we're really trying to get a handle on this bucket of worms called AI. How does this integrate into our business model? How does this integrate into how we're finding and acquiring clients? How does this it's really at every level of how we're operating a business and how I think even at a larger scale, how the world is going to operate and how the economy is going to operate, how society is going to operate. So I think we're really in that bucket. And I think there's a big misconception right now that, everybody's using AI and that it's a lot farther along, as far as integration goes than we think. I actually saw something online yesterday that was talking about the percentages, and it's really only about if you're paying to use AI monthly, you're part of, I think, around a 4% demographic of people who are actually paying to use AI. If you're using AI daily, like some type of free model, I think you're somewhere around like 15 to 20%. Don't quote me on this because my memory is pretty bad, but it should be really close. So I think we still have a long way to go as far as people figuring out where it fits in and how things are going to work. And again, that touches every aspect of our lives, the global economics, how business operate. But yeah, I think that's where a lot of people are at right now, and that's really
I
what
think
we're
it's
wrestling with.
I think it's the calm before the storm. So what I've noticed in my business is I go through these periods of time where I work where I'm just super hyperactive, where I work every minute. And then I go through other periods where I'm more contemplative, where I sit back and I'm wondering what I'm going to do next. I do very little except ride my motorcycle and watch soccer on TV. So I've been in one of those kind of sit back and see what's happening modes.
Mm,
And what is missing is agency with AI. So if you can prompt well, like for example, I had a problem with my billing system where it's like somebody missed a single payment on a subscription. It just canceled their subscription. Send them a note. It's like, you're out. It's like, no, I don't
yeah,
want to do that. Yeah, don't do that. So I wanted to, yeah, how do I fix this? And I use this service called Sweet Dash from my back office. And it said, you need to go into your Dunning and this page and your
mm,
authorized.net. And it went through and just listed out exactly what you need to do. It's like, that's amazing. So I'm like, okay, go into Dunning, close, and I go into authorized.net and there's a chat box. So I just copied what my AI told me to do, put it in the chat box, and it came up with a step-by-step of exactly what to do. I didn't even know what some of these words meant. I'm not a really technical person. So I went into accounts and settings. I went to billing, Dunning, all these things. I'd set it up. And a minute later, I was done. Now, what was missing was AI didn't go and fix the problem today, but that's changing. What's going to happen is AI is going to recognize that subscriptions are being canceled and customers don't want to be canceled and sent those notes, and it's going to go in and fix it, and it's going to tell me what it did. And that's when things really change, is the agency of it. So
Mm.
have you heard of vibe coding?
No, I haven't.
So vibe coding to me was crazy. I just was, reading about this. The people who are able to put new technology to work first are usually the technologists, the coders, but the coders are terrible about deciding what's the next business to start. Coders, they create these great apps, but they put it out there and spend a bunch of time on it, and turns out nobody really wants to pay for it. So that they're notorious for that. But what they are very good at is putting things to work. So vibe coding
Mm.
is essentially taking AI and putting it inside the BIOS of their computer and just having it go to work with all of their authorizations. It's a little bit dangerous, but if you're able to contain that, it just does the work for you. So at Anthropic, what they found out, one guy did this for the first time. And then, oh, by the way, this eventually turned into Claude, their product.
Okay. Yeah.
He puts this out there to his buddies and said, look what I'm doing. And then a couple other people start using it. And then 50% of the dev team is using it. And then now everybody uses it on the regular. But it started out, people would put it to work on something, they'd watch it and see that it's doing the work, and they would go to lunch and come back. And then during that lunch break, they saw they got more done than had they stayed and done it manually instead of this bot.
Yeah.
And then they expanded it from there. So they are able to get so much more done. And obviously, the AI bots are being trained at an exponential rate, so they figured it out. But the regular people have not. So when the people ask, well, what could really AI do for you? Like if you're a title agent in real estate, is that really going to help you? But if you ask the average person, what does a title agent do when they first come in the morning after their coffee? It's like, I don't know. Nobody has any clue. What's their typical test? What do they do? Nobody really, except if you're in the title industry or you work regularly with title agents, but title agents themselves know exactly what they do, and they will put that to work really well when it gets the right agency. We're right around the corner. So I don't like to be alarmist, but here's the thing. People have about 5 years to figure this out, because we are in a K-shaped economy where the people who control assets and the means of production, they're doing great. The people who trade time for money are in trouble in a big way. And this is happening very quickly. So if you need to earn cash for the productivity that you can produce, that's a problem, because it's a matter of some short number of maybe months, but single-digit years where people are going to be able to do that with AI a lot cheaper than hiring you and giving you benefits and a 401k and vacation time, PTO, calling sick, all that stuff. It's changing. So be on the side of having assets. And what that means is if you're considering taking your family on a trip to Europe as kind of a celebration because you're going to retire in the next 5 years and you've got some good savings, you're on a great track, don't. It's like right now, take that money by producing assets. And if you have retirement plan assets, superpower that. Push behind it with what you understand, what you know, and get that moving, because you don't have that much time left. You can't today, if you work for a living, say you make $50,000 a year,
Mhm.
you could get a raise, save some money, buy a rental house, and move up into the upper part of that K. And in the next couple of years, that's still available to people. It's just that's going to stop. There's going to be no mobility. You're not going to be able to move from, I produce value on an hourly basis and I want to get paid for it. You can't turn that into an asset holder. That's going to go away very shortly, and people need to prepare for that. So the listeners of this, that's the biggest message I would like them to see, is they need to figure out how to get as much producing assets as they can, and don't think that trading time for money is going to be their savior.
And I think the big question that brings up, especially for beginners who may not be preparing or looking at, you know, what what a producing asset is, where, you know, some of the things that pop into my head is, where do you start? You know, how do you, because like you mentioned, if we are on this timeline, you really have to almost accelerate your understanding of what that looks like. So how would you say, how would you start? Where would you begin?
Well, I've been doing this long enough to see people succeed and see people fail with their accounts. So we have, about a 3% churn rate on accounts. And my old company was the same thing. It's about 3% churn rate, 2 to 3%. The people who closed their accounts either died or lost their money.
Mm,
One half of 1% were people who are doing well and then left for some other reason. So don't try to become an expert in some super technical field with a lot of competition. There's just not a lot of time left for that. If you have a good friend who has been regularly successful in self-storage, for example, and they've done 15 projects and made money in every single one of them, and they're looking for investors in the next project, do that. Do that with your IRA. Don't go to school on how to be a self-storage, real estate mogul. I just don't. The people that I've seen fail, the people that get over their heads with that kind of stuff, or the people who are very busy at work, doctors, some people who have very high demanding hourly jobs, try to take on something where if they don't watch every minute, it's going to go away. Don't do that either. So understand what the investment is. And everybody has their sphere, their sphere of knowledge and sphere of people around them. And tap that. They need to be vocal about letting people know, you know, I've got $150,000 in a retirement plan. I'm looking to make some investments beyond just this, S&P 500 fund that I'm in right now. Do you have any ideas? And you'll be amazed. People will say, well, my brother, he is, and they'll bring this up,
mhm,
and go with what you know and what, like I think it's Peter Lynch said it from Fidelity Funds. Invest in what you know. I mean,
mhm,
if you're a veterinarian, you probably have an idea of the products out there that are in demand, are going to be growing in demand. Invest in those products. Just do the stuff that you know. And here's the thing about publicly traded stocks and equities. Um, there's going to be a shakeup on the companies that are able to continue their growth rate and the ones that are not. And we're not exactly sure which they're going to be yet. We're surprised every day in what AI and robotics is going to disrupt.
hmm,
So it's like I was reading about AI bots and how in a year, people are going to have an AI bot that's going to recognize the gap in their industry that they're in. It's going to bring on the resources it needs to fill that gap. It's going to hire with its own resources that you allocated to it, probably stable coins, and it's going to hire other AI bot agents to do that work, have regular meetings on their progress, put out the product and bill for it, and report back to the company owner what it's doing. And I'm thinking, that's arbitrage, like T-Rex style arbitrage. And if you're a new entrepreneur like I was, I saw this gaping hole. It's like I didn't need to be that smart to know that, especially the crowdfunding portals are going to need a very efficient way to onboard their customers to use retirement plans to make their crowdfunding portal investments. And I had the solution. And much like what you guys do at Safeguard, setting up the LLC and the IRA owns it and makes the investment. And we
mhm,
set up trusts, and then the trust had a wallet at the crowdfunding portal, and that wallet was able to make investments in the crowdfunding portal's investments, just like their taxable accounts, which was new
mhm,
to them, which was now they scale their retirement plans. But before that, they had, I think we had 3.5% of our assets at this crowdfunding portal in New York invested in retirement plans with 40 different custodians. So 40 custodians for every dollar in and dollar out. It's like, it was just unworkable. It was just, you just couldn't do it. You couldn't scale it with retirement plans, but that solved that problem. That was a gaping hole that I saw and I got ahead of and I managed it. Today, I don't see a lot of gaping holes that if I work hard, commit resources to it, I'm guaranteed to get this result. It's just not there. Even though my old CTO came to me and says, I want you to look at my virtual assistant startup that I'm going to start. I want you to poke holes in it and tell me what you think about it. I looked at it and like, I think that's going to be challenging in the future. And he says, what about this? What about this idea? And he showed me another full pitch deck of another idea. And it was a fully developed pitch deck with, VCs, projected financials, everything else. Where'd this come from? He said, I have 70 of them. Like, what? Brian goes, I've got 70 different ones. Which one do you go through them all and pick which one you want to do? And I want you to be the CEO of it. Like, no. If you have 70 pitch decks of ideas that are all guaranteed to do great, it's like, I just don't think that's where it's at. I just don't know if I can commit to just randomly picking one of those 70 that I think is going to be my financial future and bet on it. And so I'm worried about entrepreneurship if people can't tackle automation and AI. I'm worried about the people who say they have AI mastered and they're going to take that to the moon. It's like, I've got a customer who invested in an AI company 4 years ago. And they have less than $1 million in revenue and they're going to go out of business soon. They just haven't been able to figure it out. So it's like assets are very important. There's going to be the haves and the have-nots, and they're not going to be mobile anymore. So people need to find what their thing is going to be and put their assets to work. And if they don't have the cash yet, go get it. Go get the cash, put it away, and put it to work. Because this is, I think, and I'm not an alarmist type person. If you look at some of my old writings, some of my old podcasts I've done, I don't talk like this. I'm like, if you don't buy Bitcoin now, I'm never one of those guys. But this time, I'm telling you, is different. We have a very short window of a few years. People need to have their balance sheet. They need to get it going.
And I feel like we keep on coming back to, you need to figure out what your thing is, and you need to invest in what you know. What would you say to, I guess, an investor, or maybe even someone who's not currently an investor, who, it doesn't feel like they have a thing that they know that is like some type of producing asset? Do you feel like there is like a low barrier entry like asset to get into, or circle that you can start in to maybe start to build up that knowledge?
Yeah, there's a lot of investor groups out there. I would pick some that are in person, because you really get the gist of what somebody's about when you're in person. If you see them pull up in a jalopy and they take off their clothes that are really dirty and they put on a blazer really fast and they walk into the room, hey everybody, I'm a professional. It's like you kind of get the idea that, maybe don't write this guy a check. Not that, driving a fancy car is the end all be all in your, due diligence studies. But in general, get to know who these people are. And if you can get to know their families, and if you can get to know their friends, especially people who have had friends for 15 years or longer, and those people still want to be their friend.
Yeah.
Or like some of my investors and some of my new businesses, they've invested in my past businesses. So it's like they knew that I was safe because I didn't screw them on the last deal. And by the way, startup companies are interesting when they're tightly controlled by one or two people. Oftentimes what happens is the offers come in, and I've had this happen to me a couple of times. And the offer is this: okay, we're going to deliberately tank your company. And then what we're going to do, we're going to hire you revive it with us, and we're going to pay you this big fat salary, and things are going to be great. I mean, you get to make a lot of money. Your investors don't make really any money in that, because they have a loss, but they're expecting a loss. Like 9 out of 10 startups fail, so they don't get surprised by that.
Yeah.
But you're going to have this high salary. Things are going to be going great. And I had to tell people I'm not doing that. He's like, These people came on the ride. I
Mhm.
wouldn't be where I'm at if these seed investors had not done that." So I think it was 11 seed investors where they invested $650,000 in my company. I ended up selling for 7 figures, and they all had a nice return. And when I went back to them and said, "I've got another company," I was a safe bet. So it doesn't guarantee that I'm gonna be successful in the future, but they know that I'm at least gonna try for them. There's a lot of people out
Yeah.
there, they're not even gonna try. It's like it's a failure before it starts. And you've probably seen a number of people lose money in self-directed just because they're writing a check, they're unsophisticated, they haven't done their due diligence.
Mhm.
So I say the first part of getting on that top part of the K is don't lose your money with something that doesn't really have a chance to succeed. And go into ChatGPT and start putting in, this guy says he's going to start a restaurant. And I asked him if he had permits yet. And he said, no. What are some of the things I should worry about? And it's amazing. It'll come out and it'll tell you something like, sit down with him. And here's 9 other questions to ask him.
Yeah.
And it's like, it's amazing. So use ChatGPT on your due diligence and find out what's a good investment and what's not.
Yeah, and I think mentioning, asking ChatGPT, I think it's even smart in a lot of cases to to get like a second opinion from
Yeah.
another AI chatbot, right? I don't know. I think of it as like, we have these like four doctors. You've got Grok, you've got, you Google's AI, you've got ChatGPT,
Pilot.
you've got Copilot, you got Claude, all of these amazing large language models that are all pulling from millions of data points. You know, going to one may give you, and I think can give you a lot of information, but taking a question to one, cross-referencing that with another response, and maybe taking the similarities from both, I think is a good way to not only get, good information, but to get really potent and really meaningful information that you can apply. But like you said, I think that starting point is using it in general, just using the tool in general and asking those questions.
Yep. But people need to get off zero. When I mean get off zero, they need to get off zero in how much they're using AI if they're not using it at all, and then
Mm,
grow from there. And this might sound burdensome, but everybody should spend an hour a day trying to learn more about it, especially in this next year as agency is increasing, where not just it gives you information and spits back a nice little report that you could, you know, use for what you might do, but it's actually going to do it for you. And when that starts happening, the people who are not using artificial intelligence to make themselves more productive at work, at least, they're going to be replaced by people who use AI. And each person who uses
absolutely.
AI is going to replace 100 people.
Which is crazy, which it's such an amazing time I think that we live in, both exciting. I mean, equal parts exciting, but also, there's a lot of uncertainty. And I think being on the right side of, those two pretty polarizing emotions, like being excited about it and prepared for it and being, you know, nervous and worried because you're not prepared is really important. And I think just to wrap it up, let's kind of review what we've talked about today. I mean, I think that first point you mentioned was the changes now, start today. The best I've said this on a podcast before, but the best time to plant a tree was 20 years ago. The second best time to plant a tree is now. Like start now. But
Yes.
but yeah, let's kind of review what we've talked about as far as what people can do.
Yeah. People need to invest, but push it. There's some legal bounds in what you're able to do. You can't provide manual labor to your rental property, but
Hmm.
you can actually get going on your rental property. You can actually purchase the project that you've been looking to do for a couple of years now. They should do it now because things are going to get more difficult. I think real estate is going to be one of the last asset classes to lose its monetary premium to some other things. There is more of a sense of urgency today than there has been in a long time. So it's going to be more difficult for people to go from that plan of trading time for money as their savior, and not even Social Security as is going to be there in the same way because, um, let's not go too much into that. But people need to have producing assets they can draw income from.
For sure. Yeah. And I mean, I feel like we hear it just from all over, from all angles, just the disruptor and the changes that come from not only AI, but in the future, general artificial intelligence
Yeah,
or AGI.
yeah,
But yeah, there's things you can do today. Number one thing, start getting your funds, personal and retirement capital, into performing assets. Put yourself on the right side of that K curve, like we talked about, and spend an hour a day learning, asking ChatGPT questions about how you can improve those investments, what other investments you can get into, and just continue to increase your knowledge because obviously knowledge is power. But yeah, I've
absolutely.
really enjoyed this discussion today, Joey. For anybody listening who wants to hear more from you, who wants to join this discussion, where can they find you? Where can they reach you?
I wrote a book. You can buy it on Amazon called
Oh, there
"Blame
you
It on
go.
the Broker." It was about my experience at Merrill and Citi. But yeah, look me up on LinkedIn, Joey DiDomenico. Reach out to me.
Perfect.
People who message me on LinkedIn, I usually get back to them.
Awesome. Love that. Well, perfect. Yeah. Go check out Joey, follow him on LinkedIn, hear more about what he has to say. Some great insights today. Go check out his book on Amazon, as he mentioned. And yeah, thanks again for coming on today, Joey. Really appreciate the time.
Yeah, thanks, Nick.
Absolutely. We'll see you later, everybody.